Hola, desde Barcelona. Os damos la bienvenida a un evento único en el mundo en su primera edición, el Barcelona New Economic Week, BNew. El Consorci de Barcelona, de la Zona Franca, ha organizado este evento que es totalmente innovador por su naturaleza híbrida. Es presencial y es también digital. Tenemos registrados 9.000 personas que serán asistentes a este evento. 90% de ellas, que son de 100 países distintos, lo harán digitalmente a través de la plataforma digital creada especialmente para este evento. Pero también es presencial. Estamos aquí en Casa SEAT. SEAT es el fabricante de vehículos y gestor de la movilidad. Nos acoge en el plató de su nuevo centro de marca y experiencia para emitir 2 de los 6 canales de BNew, el canal de Cultura y el canal que nos ocupa aquí, Economic Zones. Asistiremos a charlas, a diálogos, a debates, 160 horas de contenido, entre 358 expertos. El objetivo de todo esto es reactivar la economía, generar empleo y oportunidades, fomentar conocimiento, innovación, talento y networking. ¿Y qué mejor para ello que inaugurar este BNew Economic Zones con un experto en políticas de inversión? Él es Richard Bowling, director de investigaciones de inversión en la UNCTAD, coordinador y uno de los principales autores del World Investment Report y anteriormente consultor de McKinsey en Milán y de KPMG en Londres. Richard Bowling nos hablará hoy de las zonas económicas sostenibles como un estándar mundial. Welcome, Mr. Richard. We are honored to have you here.
It's a great pleasure to be here.
So, are you going to talk about UNCTAD?
Sure. Well, it's a great honor to be here and to represent UNCTAD at this great event. UNCTAD, as you know, is a development organization of the United Nations. So we are a United Nations Secretariat organization. So we have all of the 193 member states that are also a member of UNCTAD. But of course, our beneficiary countries are primarily developing countries, the lower income countries in the world. And my division, a division on investment and enterprise, provides advice to developing countries on investment policy. We provide technical assistance. We organize intergovernmental meetings to create consensus on investment policy worldwide. And of course, at the basis of that is our research department that I'm the head of. We produce, we keep data. We're a primary source of data on foreign direct investment, on greenfield investment, etc. And we produce the annual World Investment Reports. And well, in the 10 years that I've been in UNCTAD coordinating our research, we've done reports looking specifically at global value chains, at the reform of international investment agreements, at international taxation, at industrial policy worldwide, and of course, last year at special economic zones in particular. So we have a wide remit in UNCTAD, and I'm very happy to be able to bring that to your floor of your conference today in this meeting.
Good, a great curriculum you have. So how important are special economic zones in the global economy today?
Good question. Well, they're hugely important, of course. Special economic zones, there's many types of them. Free zones, pure logistics zones, but also the type of zones with real productive capacity in them, generating value added around the world. They are a huge hub in global value chains, right, and global supply chains of multinational enterprises. They're a hugely important tool for investment and trade around the world. If I just look at trade, right, trade generates about a quarter of global GDP, and it's safe to say that more than half of that is either produced in or at least travels through special economic zones of various nature, right? So that indicates the importance worldwide of the zones. If I also, beyond trade, I look at the investment perspective in particular, right? Global foreign direct investment is about $1.4 trillion annually, right? And well, depending on where we look in the world, but especially if we look at the lower income countries, often more than 80% of foreign direct investment in manufacturing is located in or takes place in special economic zones of some nature, right? That is, I'm talking specifically there about FDI in manufacturing. That, of course, is the most important type of FDI from a development perspective, from the perspective of industrialization of the lower income countries. Clearly, if we look at well, around the world, in the last 10 years or so, by our estimation, about 110 countries have launched new industrial policies, right? Industrial policy has really come back to the fore over the last decade. And so with these 110 or so industrial policies, with special economic zones being one of the most important tools of industrial policy, the importance of zones has increased enormously. If we look at the last 10 years, there's about 1,000 new zones that have been created since 2010 alone. We're now over 5,500 zones around the world. And when we looked at this in our catalog, we saw that there's about 500 more zones that are in the pipeline to be developed over the next few years. So we're not done yet. The number of zones around the world is still very much on the increase. Zones are very important today, and they will become even more important in future. Now, the zones are, of course, they're not the same. They're not the same everywhere, right? There's a type of special economic zone development ladder that indicates the different types of zones that different countries at different phases of development would build. So lower income countries would tend to build general multi-industry zones. Once you move up the development ladder, you see more specialized zones, specializing in specific industries, often specific activities within global value chains. Moving up even further, you see zones moving to services and to high-tech zones, digital services. And in the more advanced market economies, you see zones that are actually almost limited to pure logistics bases, right? You have zones in developed and developing countries, and they're equally important everywhere. As I said at the start, much of global trade is generated in zones, but an awful lot of trade travels through zones at some point, right? So from that perspective, it's enormously important. They're not equally popular everywhere, right? So if you look at the United States, they have a lot of zones, but they're very much limited to logistics zones. In the European Union, there's far fewer of them. Originally, they didn't fit well with the European Union agenda for a level playing field and free trade within the Union. But if I look at the development of industrial policy recently, I mentioned the 110 new industrial policies having been adopted over the last few years. Even in Europe, you see that industrial policies are being adopted, specifically, for example, for digital development has become important in Europe. And that will also change the perspective on zones over the coming years in the developed markets. So even, for example, in Australia, where there is no zones yet, there are now plans to build new zones over the coming years. Just to conclude on this point, I think the best illustration of the importance of zones worldwide, to stick to your question, is the fact that this year in the G20 Trade and Investment Working Group and in the G20 Summit of Ministers, trade ministers, special economic zones were put on the agenda as an important tool of developing trade and supporting trade in this difficult period of the global economy. And the declaration of the trade ministers specifically referred to special economic zones as an important tool of trade policy. So I think that's a good illustration of how important zones are today around the world.
Yes, it is. And how have special economic zones been affected by the COVID-19 pandemic?
Yes, very much, of course. I mean, I would not presume to know better than the practitioners, the zone managers and zone authorities. They are on the front line. They probably know better than I do how zones have been affected. So I wouldn't presume to have the full answer to your question. At the same time, you know, there's certain things that are very clear, right? The COVID-19 crisis is a sort of a health shock, but also a supply, demand, and a policy shock when I look at global trade and investment, right? And of course, with zones being hubs in global networks of trade and investment, they are very much impacted by that, right? So, I mean, there's of course been, from the early days of the pandemic starting in the first quarter of the year, there's been the physical impact, right? The physical impact of the lockdown when certain types of work simply could not take place, but also the subsequent measures to try and slow down the spread of the virus are a huge impact on the operations of companies within the zones and of zone management companies themselves, very clear. If I look at the supply chain, I mean, the early impact was very much on supply chains from Asia. There were many European operations that were affected by a lack of intermediate goods or lack of components coming from Asia. So there was a supply chain breakdown, very much which very much affects special economic zones. But subsequently, there's of course a supply chain, catch up almost, right? So replenishment of inventories, and so the operations within zones are all key to that. If I look at my own area, so looking at the investment impact, we made early projections in the year of global foreign direct investment declining this year as a result of the COVID pandemic by 40% worldwide, and by even more in developing countries. Of course, that decline is not the same everywhere. It depends very much on the industry. It depends very much on where you are located. If I look at countries, regions, but also zones that are very highly GVC intensive or resource intensive, depending on the resource processing industries, they are the first to see the major impact, and investment is very much declining there. In fact, if I look at the numbers now for the first 6 months, we are coming out next week with our Global Investment Trends Monitor, which is a quarterly with new data. But just to give you a peek at what we are seeing for the first 6 months of this year, global greenfield investment has been down in the first 6 months by about 1/3, 34%. It's down in developing countries by about half. So developing countries are particularly hard hit by the downturn in global greenfield investment. That's because they are often recipients of more GVC intensive industry investment and of resource intensive industry investment, but also simply because in developing countries the capacity to provide stimulus measures to support the economy is lower, and as a result the impact on investment is more severe. And that shows, for example, in Africa, where we see that in the first 6 months of this year, greenfield investment is down by 2/3. So 1/3 worldwide, half in developing countries, and 2/3 down in Africa. And that, of course, as I said already, a lot of that investment normally would go to special economic zones. And clearly, that's a huge effect on the zones as a result of COVID. Add to that, I mentioned it's a supply, a demand, a policy shock. It's a huge factor of uncertainty, right? So, and uncertainty is never good for investment. Investors like stable and predictable investment climates, and we simply do not have that around the world today. And then there's, of course, the policy shock, right? So we saw during the COVID crisis, new trade barriers being pulled up, new investment barriers being pulled up, and you know, some of these effects have an immediate impact. There were, for example, just talking about Spain, there were some measures to slow down mergers and acquisitions during the crisis. Now that's not a huge effect on special economic zones because they depend more on greenfield investment and new productive capacity. But still, they affect the investment climate worldwide. And those policy effects might linger. Right? They might not immediately go away after, hopefully soon, we'll get past the worst of the COVID-induced crisis. So that's the general effect that I would see had the immediate effect of COVID on special economic zones this year.
Okay, so let's think about the post-pandemic. What role do you see for SEZs in the post-pandemic recovery?
Yes, that's a very good question. I think to think that through, we have to again go back to the role in general of SEZs, right? So SEZs are spills, they're hubs in global networks of investment and trade, they're hubs in global value chains. Now, global trade is down, the World Trade Organization estimates trade will be down about 15% at the end of this year if we put everything together. Their early estimate was actually more severe. They estimated anything up to a third, 33% decline this year, but it looks like, looking at early figures, the negative impact on global trade might be hopefully limited to about minus 15%. And of course, if we want to recover from this crisis, then the first part of the global economy to tackle is to bring back the dynamics and the vitality of global value chains and global trade networks. So for that, special economic zones are hugely important. Now, if we look at what is necessary in the recovery, what's necessary for special economic zones around recovery, well, the first thing one would of course think about is whatever activity is necessary to make sure that we don't relapse. So the health measures that zones and companies within zones have put in place need to be maintained. We need to make sure that we don't relapse, because that will stop any recovery in its tracks. So that's a first. Then bringing back trade to its old level. The trade facilitation measures that special economic zones represent, and not just put in place, but special economic zones in themselves are a trade facilitation measure almost. They are vital for bringing back trade. I think there may be a role for special economic zones management companies and special economic zone authorities to support governments in implementing the type of economic support measures for companies, keeping the tenants of zones alive and helping them with programs, furlough programs for employees or reschooling programs for employees. I think those are important activities that might be important for zones to support the economy. And then going back again to my own area of investment, unfortunately, our projections are such that we don't see a rapid recovery of foreign direct investment, of new greenfield investment in the zone. So I think that the support that zones can give to the global recovery needs to be done with the investment they have already, with the activity they have already, bringing it back to previous levels. The dependence on new projects, many zones still are trying to attract new greenfield investment. We don't see a recovery until 2022. It's important to keep that in mind. But there are many things that zones can do in the immediate term to try and support the survival of the companies located within them and to try and bring back trade to prior levels.
Good. So if you don't see a quick recovery, let's think about the future. How do you see the longer term prospects for SEZs?
Longer term, so beyond the recovery.
Yes.
Well, our World Investment Report this year, so the 2020 edition of the World Investment Report, actually looks specifically at expectations for what we call international production, which is basically the combination of global trade, investment, GVCs, the activities of multinational enterprises around the world. So international production to 2030. So we look at what are the potential trajectories that international production could take over the 10 years, over the decade that we have just entered. And of course, it's very hard to predict at the moment. I mentioned the uncertainty that COVID is causing, but it is not just the COVID-19 crisis. There were already some pre-existing trends in place that will have an enormous impact over the coming decade on international production and hence on the prospects for special economic zones, which are basically hosts of the key actors in international production, traders, investors, multinational enterprises. Now, what do we expect and what are those trends? So the trends, in addition to COVID, that will shape the coming decade are policy trends. We already were in a situation where there was a trade war, primarily between the US and China, but also involving other regions around the world. And those trade policy tensions will not go away. In fact, they are still there. They're still getting worse. Another factor is technology, industry 4.0, as it's often called in Europe, or the new industrial revolution. Those trends will enormously affect international production and global supply chains. And there's another trend, which is the trend towards greater sustainability. Of course, all these trends hang together. So, the need for sustainable development will affect trade policies, will affect investment policies, and will affect technology and will have cross linkages with technology. So bringing this all together, these big mega trends, how will they affect international production over the coming decade? We hear a lot about the decoupling of trade between the United States and China. We hear a lot about the restructuring of global supply chains. Now, if I look at that restructuring a little bit more in detail, we see 4 trajectories going forward. So restructuring of global supply chain could result in reshoring. It could result in regionalization, more regional supply chains. It could result in what we have called resilience-seeking diversification or resilience-seeking investment. And it could result in a trend towards what we call the replication of supply chains, right? So a lot of re's there. Now, let me look at them very quickly and very briefly, just one by one, to see what's the real impact on and what's the real importance for special economic zones of all these restructuring trends, right? So reshoring is something that it sounds ominous, and it will cause a lot of challenges for zones in many economies, especially in Asia, but they at the same time represent an opportunity for zones elsewhere. And there will be zones located closer to the major developed markets in the world that would still offer a significant cost advantage, and that may be able to capture some of the reshaping of global supply chains and some of the investment that is involved with that. Regionalization, similarly, will bring opportunities as well as challenges. But the opportunities are there. They are, first and foremost, very clear in the proliferation of regional economic cooperation and regional free trade agreements that we see now. If we look at Asia, we may see the signature of the RCEP very soon in November, if all goes well. In Africa, we have initiatives for further regional cooperation, and there's a lot of opportunity there because often regional supply chains until now have not been particularly encouraged by the policies within these regional economic cooperation agreements. Some of these agreements may even have limitations on the sales from special economic zones, from free zones in the domestic or regional market. And those type of limitations are likely to have to be lifted now that we are going towards a trend and a need for more regional supply chains. So that would bring opportunities in terms of liberalization of regional markets. If I look at resilience seeking diversification, a real opportunity there. It's very much linked to the type of reshoring trend that I saw earlier, but the resilience seeking diversification, the way we see it, is very much driven by digital supply chains, by digital capacities. That means that zones that have the right type of technological infrastructure and digital services to support supply chains and to support investors and manufacturers in zones and services companies in zones have an opportunity to expand and to attract more investment in future. And the last one that I mentioned, we called it replication, and what that really is something, is a trend based on a technology development towards distributed manufacturing. And that will lead to opportunities to attract mostly smaller scale distributed manufacturing investors. And what that means is that whereas zones around the world have, of course, always pursued very actively the large industrial scale type of investments. They are the holy grail. We all want to have the big industries in our zones. But with the developments that we see now, we may see more smaller scale distributed manufacturing, i.e. in more than one location. That means that competition for investment may move from the type of zero-sum game, only one investor going to one location and it's either me or it is you. It may go to a type of distributed manufacturing network where there is more than one location that can hope to attract investment and can hope to attract investment with leaner type infrastructure. So we may not need the type of costly, sophisticated infrastructure that many advanced market or emerging market zones have been building, but there may be opportunities for lower income countries with less big infrastructure to attract investment with leaner infrastructure in smaller scale manufacturing. So there's some real opportunities there. Of course, there's huge challenges involved as well. We expect value chains to become shorter. We expect the capturing of value added to become more difficult with the concentration of intellectual property in fewer markets. So there are huge challenges that zones will have to face in the restructuring of global supply chains, but there are certainly opportunities to be captured.
Yeah, always challenges and opportunities come together, right?
Yes,
So,
always the case.
yeah. So my last question, what are you hoping to take away, and what do you think the audience should take away from this debate today?
Well, you have a hugely interesting agenda, so I'm keen to follow it. I mentioned some of the things that I think will be discussed a lot today, and they all revolve around the opportunities and challenges that I mentioned. Some of them are, what are some of the more innovative and better prospect responses to the short-term issues that we face during the recovery? So what can zones offer their tenants, their investors, firms operating inside the zones, but what can they offer policymakers as well in terms of supporting them during this phase of recovery? So some innovative solutions for supporting policies aimed at pushing the recovery. Then similarly, what are some of the things zones can do to help during these to help face these longer term challenges? So I mentioned the expectation for shorter value chains. I mentioned the expectation for greater difficulty in capturing value, but I also mentioned the opportunities. So what are some of the prerequisites for the attraction of investments that zones can help policymakers build over the coming years? But then I think the key takeaways, if I think about it, it's the theme of the conference, right? So sustainability. We launched in our report on special economic zones the idea of what we called a SDG model zones, right? So SDGs, the United Nations Sustainable Development Goals. What implications do those Sustainable Development Goals have for special economic zones? And the idea of the SDG model zone is, well, it has many components, but they revolve around, well, of course, the highest standards of environmental, social, and governance standards. They revolve around the opportunity to stimulate investment in what we call SDG sectors, right? So these are sectors that particularly support one of the 17 SDG goals, right? They can be anywhere from educational to health services to different types of infrastructure and in basic infrastructure industries. And they revolve around making sure that the benefits of zones spread beyond the geographically confined type areas that zones are in. So, for example, many zones now are, as I mentioned, quite sophisticated. There's a lot of investment involved in simply building the initial infrastructure of zones to make them attractive for operating companies. And some of that infrastructure, which can be dedicated energy provision, which can be dedicated waste management type installations, which can be dedicated educational or health services, could also benefit wider communities, right? So the concept of the SDG model zones is standards, it's promoting SDG investment, and it is promoting beneficial impact beyond the geographically confined zones, right? And there's no one way of going about building SDG model zones. They are meant to just be an inspiration for zone management companies and an inspiration for policymakers designing zone development programs. And I'm hoping to hear some examples today of how this can be implemented, or some ideas for how to further develop the idea of SDG model zones.
Richard, we do have two more questions from the audience here, because we have some audience here. So, should Western Europe adopt economic zones to recover the economy?
Good question. I mentioned earlier that in Europe in particular, Western Europe in particular, Brussels has never been a great fan of zones, and they have never been a great fan of industrial policy. But over the last 5 years, they have adopted a digital development strategy, and they have adopted policies that very much resemble new industrial policies, right? And they have also developed zone concepts, and individual countries within in Western Europe have developed specific concepts that could that resemble the concept, or that resemble the idea of special economic zones. There is the enterprise zones in the UK, which are very much meant to support regional export capacity. There are similar zones in France that are meant to lift up less developed quartier zones within urban areas that are less developed or where there's high unemployment levels. And the idea of such zones, so geographically confined areas where there are specific incentives and specific programs in place to support business, they are basically a type of special economic zones. They may not be the original concept of that you see in Barcelona, of very much logistics driven zones close to ports to stimulate investment in global value chains, but the concept is very, very similar. And there are many industrial parks in Europe. There are many parks in Europe that are technology parks or zones located close to universities to try and capture the opportunity to build new startups, to build businesses around technology and knowledge developed inside universities. So your question is a very good one, but I would almost answer it by saying there is an opportunity for Western Europe, but there is an opportunity for many different types of zones, and many different types of zones that may not be so close to the original concept of zones, right? So if we think about the rest of the world, especially the poorer parts of the world that are, for my organization, the main constituency, where zones are very much built because it is very difficult to put in place the type of infrastructure and investment and trade facilitation that is needed to promote trade in the entire economy. It's costly for low-income countries, and it is easier to do so in smaller geographical areas or confined spaces. In Europe, that is not so much the problem. We have already an investment climate that is reasonably attractive for most investors around the world, but there are other opportunities there to develop business, to develop trade, to attract investment around the development of technology and digital capacity.
Okay, thank you. And we have some time for another one. Do you think economic zones should be a state policy instead of a government policy?
A state policy, I presume the question relates to federal government then. So governments that have multiple layers. Otherwise, I find it hard to interpret this question specifically. I think it depends very much. When we provide advice to governments on investment policy, there are certain things that by nature are national. Trade facilitation is very much a national policy, but investment facilitation already becomes very much a subnational policy. There are many rules, regulations, business registration, licenses, permits that are being mandated and implemented at either regional level, state level, municipal level. So from that perspective, SEZs in many countries can be a subnational level type trade and investment policy. They don't necessarily have to be a federal level policy. We, as UNCTAD, also implement specific online tools, information portals, online single windows to help governments improve on trade facilitation and investment facilitation. And we implement those tools, especially for investment facilitation, at subnational levels. And in certain countries, we implement information portals and single windows for investors to streamline administrative procedures such as licenses and permits and business registration, to streamline them specifically for SEZs. So we have countries where just countries that spring to mind would be Vietnam, where we have implemented such online single windows specifically for zones. So There's no one right answer to your question. It depends very much on the form of government, but I would agree that there is an opportunity to use zones, which are basically a policy tool for trade and investment, to use them at subnational level.
Okay, Richard, that's all. Thank you very much. It's been a pleasure, an honor to have you here, and
Welcome.
And very helpful speech with your huge knowledges. Thank you very much.
Welcome.
Y gracias a todos vosotros por estar aquí. Gracias a nuestro patrocinador Servi Habitat. Volvemos en 10 minutos, después de la publicidad, con Be Woman, un panel que promete ser del todo divertido. Nos vemos ahora.